So now the next thing we are supposed to talk about, I've said in the next part of this question, that is November 2015. So it's all about the statement of changes in equity after we have already done the statement of comprehensive income. So when doing the statement of changes in equity, you need to understand all about the format of the statement of changes in equity. So the statement of changes in equity, remember that it's all about, it shows the movement of equity components. So it shows the movement of equity elements or items during the financial period. So of which you need to know that which are these equity components. So the equity components are about ordinary share capital, share premium, revaluation reserves, retained earnings, general reserve. So either in your equation, it's not a must that you can be given all of them. But in equation, you can be given either ordinary share capital, share premium. So either of these, so those are the equity components. So in order to do the statement of changes in equity, you always take your trial balance so that you determine what items are you given there. So which are the equity components have been provided. So you start from the broad down as per the trial balance. So after that, you talk about issue of shares at premium. Issue of shares at premium. So the issue of shares at premium, remember that premium is the difference between the par value and the market value or the exercise value. So the issue of shares at premium, obviously, it will affect your share premium and it will affect your capital. That is the revaluation gain. Remember, the revaluation gain is all about what you have, what you already have, what we did. The revaluation gain, like now the one for land and building. So it increases your revaluation reserve. It increases your revaluation reserve. Then you take it to the total. Then you have profit for the year. So profit for the year, that is from the P&L. That is from the income statement we have already did. So that is the profit after tax. So this profit for the year is the profit after tax. So that one goes to the retained earnings column. So you can see here where we have recorded it is under the retained earnings column. That is under the retained earnings column. Then after that is all about concerning. After that is concerning what? The dividends, which I've said they are paid out of the profit. So that this retained these dividends, so the dividends paid, they are paid out of the profit. That's why we subtract here under this column. If you can check on your note, these dividends are subtracted under the column of retained, which is here anyway, retained profit. Then transfer to general reserve. So remember that we can decide to set aside a certain amount, which will cater for any eventuality which will arise in the future. So when we transfer an amount to general reserve, is amount which is taken from the retained earnings. So retained earnings is where we have the profit. So you take a certain amount as stated, you subtract from the retained earnings, then you add it. Guys, are we reading from the same page? Are we together now? Winston? Winston?
We are together, Mwalimu.
Because I realized there was a connection issue from my side. Or you are okay, everything is okay.
Yes, yes.
So we can continue. So after this, after we are done with what we were trying to display. So this is what I was trying to display. I think I have been displaying this. You have been seeing this? Yes?
Yes, yes, Mwalimu, we have been seeing it.
Yes, yes. So that is why, because I realized that there was an issue on my side. So anyway, we continue. So if we are done up to the transfer to general reserve, now we can be able to do now to do that statement of changes in equity. You do the statement of changes in equity if you know this format. So because everything will be all about you follow this format. And that's all. So you go to your question, check the equity components you have. The equity components which you have. So in this question now, if you go to your trial balance, if we can open our trial balance, so that is the one which will guide us. So this is the trial balance. So which are the equity components which I have here? The first one, the one I have is this ordinary. The next one is share premium. The third one is general reserve. I have a retained profit, that is retained earnings. Another one. So therefore, so that is ordinary shares, ordinary share capital, share premium. We have general reserve. We have the retained earnings. That is fine. Then additional information. From additional information, there's this one. This out of run and building, there was a revaluation. There is a revaluation. So I need to write on my whiteboard the ordinary share capital, share premium, reserves. So I have to list all of them. Then the total. So I have to list them here. So I will be using abbreviations, ordinary share capital. So this is ordinary share capital, OSC. Then there was a share premium. Then there's a general reserve. So I'm saying ordinary share capital, share premium, general reserve. Then there's a retained earnings from these are direct from the trial balance. So the trial balance is the one which guides you. Once you know them, but now you pick what you have. You know all of them, but you pick what you have. Then finally, I said from the additional information, there's a revaluation. The revaluation. So after that, you talk about the last column, which is concerning the total, which concerns the total. So then now you talk about balance product. So the balance product. So the balance product is according to the trial balance, which I can see we have 100 for ordinary share capital, 244. We have 570. There was 349. Then this is dash. So you give me the total. Add there, give me the total. So that is 344 plus 570 plus 349. So on my side, I'm getting 1263.
1263.
All right. So after that, remember that in our format, the next thing I said we check is what? If there's an issue of shares. Was there an issue of shares? Was there an issue of shares at premium? In short, was there any issue of shares which took place? There was no issue. There was no issue of shares, but there was a bonus, a bonus issue. So that one we can record that one. Then after that we talk about revaluation gain. So I can be able to talk about bonus. I can be able to talk about bonus. So the bonus, remember the bonus is all about the company which issued shares for free on a certain proportion, which means that it will increase my capital. It was 33. Then at the same time, they said capitalizing its general reserve. If you can check that additional information number asked. So capitalizing its general reserve, which means that the money which was financing that bonus was coming from the general reserve. So I have to subtract that from general reserve, then I add it to ordinary share capital. So which means that this is 0. Because 33 minus 33, that is 0. Then the next thing I talked about is what about, we talk about revaluation. So revaluation, go to the revaluation. This is 484, the one for run and B building. The one for run and B building. After that, the next thing we need to check is concerning what? Profit for the year. Profit for the year. Then after profit for the year, we raise dividends. Then we check if there was anything which was transferred. So profit for the year. So profit for the year you want? It's a profit after tax. 59 point? 0.5?
Yes.
Yes, 59.5. That is from the income statement. Then after that, I said we record on dividends. So dividends paid, remember, they will be paid out of this profit. So you check from your trial balance. There was somewhere they mentioned about interim dividend. There's something where they mentioned about interim dividends being paid. There's somewhere here. Did they mention about dividends on this question? These interim dividends paid, which is 6. So that one is the one which we need to raise. So we raise 6 there. So I think there was no transfer. If there was a transfer to general reserve, we could have done that. Transfer to general reserve, but there was no transfer. If there was a certain amount, they could have said that there was a transfer to general reserve, which we could have subtracted here. We added to general reserve. So up to that point, I think we can get our balance carried down. So our balance carried down. So the first one is 133. This is 244. So 570 minus 33. That is 537. The next one, 349 plus 59.5 minus 6. That is 42.5. Then this is 484. Then the last one, 1263 plus 484 plus 59.5 minus 6. That is 1800.5. So I think we are together. We are reading from the same page. Up to that scenario. Is that okay? Can I clear my board? If there is no any question.
Yes. Go ahead.
The next thing we need to do is all about one working. There's a one working I need to do on. So there's a working concerning, before even we continue, there's a working concerning what? So now we are moving to the statement of financial position. So the PPE. In this scenario, there was Rand. Rand was revalued to 100, of which building was. Remember that the total was, it was revalued to 800, of which they said the Rand was 100, so building was 700. But remember, building was depreciated by 40 years. So we divided and got a depreciation of 17.5. 700 divided by 40 years. I think you remember that. So that is 682.5. Then the one for plants, we got it direct. So plants and equipment was, I remember I said I have a net book value on a certain working I did, of which it was 120 minus 24 minus the 4. Do you remember this? We got 92. I think you remember how we arrived at those 120 and the 24. The 120 and 24, I think you remember now we arrived at that. So it's through this, what we did there. Cost minus accumulated depreciation, but after we subtracted what was disposed, then 20% of that, we got 24. So cost minus accumulated depreciation, we got 120. Then 20% on this, we got the depreciation for the year of 24. So we took 120 minus the 24, minus the impairment, which they said again was going to reduce our asset. So we got 92 as net book value. This one I said about it. I talked about it. So the total there, the PPE, property, plant and equipment total is 100 plus 682.5 plus 92. So that is 874.5. 874.5. So 874.5. So let us finish very fast here. Now presentation. So statement of financial position. So I'm not writing a lot of things, but you know what I'm doing is the statement of financial position, of which I start from non-current assets. So non-current assets is the PP which we have already recorded. So the PP which is 874. So the 874.5. So the 874.5. Then there was an investment property. So remember the investment property increased to 586. That one you can be able to see in the additional information number second trust. Then that was the only long term. Then another thing we talk about what? Current assets. Current assets. So current assets, we talk about inventory. So inventory closing, we did working number 1, we got 381. Working number 1, there's a working we did. I think you have that workings. Then remember we need to record the receivables, of which receivables is direct on this question from your balance sheet, 545. Then even cash is direct, cash and cash equivalent. Cash and cash equivalent is direct, which is 28. So at that point, we have total assets. Then equity. For equity and liabilities, you copy what you have from your what we got from the statement of changes in equity. So the statement of changes in equity, the total down there, ordinary share capital was, I think you said it was 133. This one you copy from the statement of changes in equity. Our share premium was 244. Our general reserve was 536. Or it was, I think it was 536.7.
537.
530?
7.
537. Then what about retained earnings? Those figures, I don't have them here. Retained earnings is
42.5.
42.5. That way. I think revaluation was 484.
44.
So up to that point, that is okay. Then current liability, so non-current liability. So non-current liabilities, we have 4% loan. So the one for 150. Then remember, even deferred tax is a long-term liability. So the deferred tax, the one in additional information, 3. The 7, that is a long-term liability. Deferred tax, provision for future taxes. We call it, that is deferred tax. So then we have current liability. So the current liability, the payables which is given, this 434.
434.
The last, now you talk about the accrued interest. You see the interest, the total was 6, but I think I explained the 3 was paid. So the accrued is 3. So that is the total. Liabilities there, equity, total equity and liabilities. So let us check if the question is balancing. So that is 874.5 plus 586 plus 381 plus 545 plus 28. This one I'm getting here is 24, 14.5. Then the other one, or about equity and liabilities, 133 plus 244 plus 537 plus 402.5 plus 484 plus 150 plus 7 plus 434 plus 3. Is there any issue really? Because it's 133 plus 244 plus 537 plus 402, 484, then 150, then we have 7. Then there is something there we have not recorded. So you can see here, under the accrued, under the accrued interest, there's something concerning, I said, the tax. Obviously, I did the current tax of 20. They always say that is either estimated, is to be provided. So this is something which has not been paid, which obviously it's a liability. So if we add the 20 there, you can see it's becoming 2414, 2414.5. So the 2414.5, the 2414.5. So the same as for the assets, because the assets here again is 2414.5. So anyway, I think you have the knowledge now of doing any equation of published. You have the knowledge of doing any equation concerning published. Now I want to hear from you guys. If you are okay with that, we can be able to call it a day, so that when we meet next time, I expect to do you to do one question for me. The 2016, the one I have not done. The November 2016 question too. The November 2016 question too. Or with that November 2016 question, the only different things it has there are some two workings which you need to know how to deal with them. I think this one, you are okay with this one before I open the other one. Winston, Joy, Henley, Steve, muko sawa? Yes? Oh, yes, Joy. Any question on the question we have done? Henley, mmenyamaza sana.
Me, I'm okay.
Oh, so let us open the other question. Anyway, silence means consent. Let us open the other question, then we look at it. We are not going to compute, but just looking at it, so that I can be able to explain 1, 2, 3 things. And that will be your assignment. So that was November 2016. So the other question, that is the question. So this is the question. So the question reads, the foreign trial balance was extracted from the books of PIC Limited as at 31st October 2016. So you can see we have rand, building, plant, and so on. So those are some of the things you know. Additional information. Additional information number 1, they say the 8% debentures were issued on 1st January 2016. Interest is payable 6 months in arrears. Interest is payable 6 months in arrears. So you need to work on that to get the interest which was payable in 6 months in arrears. You have to work on that. So how will you work on that? How will you do that? Also, they have said that the 8% debentures was issued on 1st January 2016. Interest payable 6 months in arrears. So arrears, remember that it's all about after 6 months. After 6 months, 6 months. And this question of ours, anyway, so you need to talk about the 8%, the 8% debenture. The 8% debenture. So the value of the debenture, was 300. If you can check that from the, if we can be able to check this from our question itself. So this is all about the 8% debenture. So the 8% debenture from the trial balance, this is the 8% debenture from the trial balance, this one. So we have the 8% debenture, that is 300. So the return from that, we need now to get our financial year, remember here, our financial year ends when? October 2016. So let me draw that here. So it ends on October. So our financial year ends on October 2016. So which means that our financial year starts on 1st November 2015. And the interest is payable 6 months in arrears. The interest is payable 6 months in arrears. So anyway, will you be able to try this question so that we call it a day for today, so that we meet next time once you have tried to do it on any explanation maybe which will arise, or I can explain on the additional information then you do. And rather just agree. So you do it, then I will check.
Yeah, let us first of all try it, and then when we come back, we will see the workings.
Oh, that is fine. So we can call it a day for today because I see it's almost 11. I don't want to go to 11. So we call it a day. You do that question.